probably what you've seen in the last few days, really a lot of focus has been on the 10-year bond. And, you know, the 10-year rate has probably hit around 3.20. It's gone up. It's probably been about the highest in 7 years. And the reason it's gone up is primarily because of the things that we've seen. We've seen a better economy, tax reduction, less regulatory burden, and people are spending money, and it's a great economy, and that's the reason that you're seeing the 10-year go where it is today. In fact, if it's probably a good thing that, you know, I know there's some criticism, but the rates have been artificially low for such a long period of time. The Fed has kept them low 10 years plus, and they've kept them that low because we've never been able to really hit a GDP. Now we're at a 4% GDP, and so if you're ever going to take rates up, now is really a time to get more into normalization so that you have some bullets when the economy goes back down.
Well, you are the Fed, though. Aren't you an advisor to the Dallas Fed, the Houston branch?
I have to be careful what I say, but yes, nobody likes the Fed right now
today.
That's
fine. Have you gone crazy? Have you gone crazy?
No, I would tell you.
You don't look like does he look like he's crazy?
No. I would tell you there's a lot of criticism of the Fed right now, but the Fed is going to be very patient. Now, I'm not a voting member. Rob Kaplan, who's the president of the Dallas Fed, is a voting member in Washington. But they're not going to go crazy. They've just kept rates down artificially low for such a long period of time. And if you look today, rates are still historically very low. And really the 10-year, based on the number of Fed fund rate increases that we've had, or prime increases, really the 10-year should be trading closer to 4%. It just hasn't. The market really just hasn't let it go up there. But it's a good economy, yeah.
So let me ask you, what y'all have done is amazing in your growth over the years. And to be the largest publicly held bank in Houston, Texas today, how many acquisitions have y'all done? Because I can remember when y'all were truly a small regional bank. And how many acquisitions have y'all done?
I started with the bank in '86. We really started buying banks in 1988. The bank really had about 10 to 12 employees at the time, with about 40 million in assets. And today we're about over 22 billion with 242 locations throughout Texas and Oklahoma. So, you know, we've grown a lot. We've, you know, made 42 acquisitions in my lifetime. Wow. We started in the 80s when banks were really failing when oil really went down. We really bought failed banks from 80s through the 90s, and then in 91, really the economy really took off, and you could really buy a bank, just on a healthy bank, cheaper than you could a failed bank.
42 acquisitions.
Yeah.
Let me ask you about housing for a second. So I know, I'm sorry to jump in. 5%. Here's the question everybody wants to know: is a 5% mortgage going to kill demand for home loans? Yes or no?
Do you know what I paid for my mortgage when I first?
13%, I'm guessing.
No, only 10.
10.
But I knew the guy was running a savings and loan.
Oh, because you got a discount.
And they're all gone now.
But you know what I'm saying?
But
is
no.
5%, because people, mortgages are at 5%, we're doomed.
No.
That's what people are saying.
Let me answer the question very easily. 5%, 6% is not going to kill the housing market. It's really ridiculous to think that rates where they're at today are just too high. They're not. This is just a normalization of rates and where we really need to be as the economy gets better. You want to be able to do this in a good economy. If you don't do it now, you're never going to be able to do it.